Hey guys, it's Trevor. In this video, we will begin by going through why a trading journal is the most important thing to improve your trading consistency, and then you will learn how to make a very effective trading journal. We will also go through step by step how to build a journal that will cover major trade statistics and how to keep this data updated in a very time-efficient process. To begin, here are some important non-trade performance reasons to keep a trading journal so you know it's not just all about trade statistics. Identifying your strengths and weaknesses in your ability to execute your plan and handle the psychological pressure of it. Tracking the progress of your trading plan goals. Self-coaching to improve your mentality towards trading and your current trading plan. So why is keeping a trading journal so important? When we look at most professionals, they almost always keep some sort of journal. Take, for example, sports athletes. They keep journals to keep track of performance so they can improve their strength, speed, or whatever attributes they are working on. Traders are most often journaling to help them track trading performance so they can be more consistent and profitable. Discipline with your trading plan is the key to being consistently profitable in trading, and a journal will help you track your level of discipline with your trading plan over time. Sounds easy, but the discipline is the hardest part. Many traders do not bother with journals and rely on their spreadsheet records along with their broker's log, but this does not provide enough information. A trading journal is not just about recording your entries and exits, it's also about refining your strategies and understanding your psychology towards these strategies. A spreadsheet record is focused on statistics like profit or loss, win rate, or average trade expectancy, but a journal is more focused on comments. A journal can be very useful not only for tracking technical information, but also mental information about your emotions before, during, and after a trade. For example, if you take a trade and you feel it won't work out because a previous very similar setup lost you money, then you may close that trade early for break even. However, that trade then goes and hits your target, and now you're frustrated, so you go and enter a weaker trade setup, and that ends up being a loss. By tracking your mental state at the time, we can look back and get an idea of why we did what we did. If we did not make note of some of the mistakes we made and our mentality, then it becomes almost impossible to improve trading results. Okay, so now you know why journaling is important. Let's move on to what you should keep in your journal. I will go through 4 major things I recommend you put in your journal. These 4 things are not in order of importance. Number 1, trade performance. Trade performance statistics in your journal can include the trades that fit your trading plan. However, you will also learn a lot from the trades you did differently from your trading plan. Your spreadsheet record for profit and loss, win rate, etc. will show this. However, it won't be able to filter out the trades which came from mistakes or a missed opportunity for a trade. You may also want to include trades you passed on because you felt they weren't quite good enough. Within the 2021 folder, if I click in February, you can see we have a separate folder for everything starting with all trades, wins, losses, and break-evens. Then we can see mistake trades, missed trades, past trades, trades for each strategy separately, and also trades taken with a different trading plan which we are testing out. Within the Mistake Trades folder, I will include details such as entering at wrong entry levels, closing out trades too early, incorrect position sizing, and so on, so that it can help us be aware not to make the same mistakes in the future. I strongly recommend, if you're using technical analysis, to also take screenshots of your trades with the analysis on the chart. Take a look at this example of a basic journal document template. Now I will show you how you can fill in this data. By the way, the letter R here stands for return on risk. So, for example, if it is 1% risk of my account per trade and it is 0.7 R, then it means I made 0.7% from that trade. In the comments section here, you can add in all the other things you wanted to record that you could not fit in the screenshot of your trade comments section. Take a look at the example I have written down here. As you can see, if you're a beginner, you do not need to cover so many performance stats and every other detail out there. Just try to focus on the bigger picture to learn the most from your trades. Next, we have market observations. In this section, you may want to include trades from other strategies you're testing out at the same time to track their performance. You may want to record tendencies in market behavior to help refine your trading plan accordingly. For example, a market might be very choppy or range-bound, therefore you may want to avoid that particular market until it breaks out of that market environment. Also, if you find your results suffer when trading through major news releases such as central bank press conferences or non-farm payroll, then you can include this in this section. Next up, we can include your mental state. Here are some examples for this. A common example might be that you're feeling tired on a Friday and look to revenge trade as you had a bad week. Or maybe you get Monday morning eagerness to trade after your expensive weekend holiday where you decided to just eat lobster for breakfast, lunch, and dinner for some weird reason. You get my point. It really can help indicate a pattern that correlates with your trading results. Last but not least, we have the trade management section. In this section, you can write, for example, if you moved your stop loss to break even after a particular level hit and that did not align with your plan. Another example might be that you took profit early because you were worried about price hitting a strong support or resistance level. However, doing this is not part of your plan. The truth is, this all sounds like a lot of information, so here is a simple list for your journal from all the things we talked about earlier. Keeping your journal up to date, it will help you treat your trading in a similar way to if you were to start any other type of business. The journal is for your benefit, so put down what you think will help your trading the most and prioritize the information which impacts your trading the most. You can use my way of journaling if you're just starting out. However, you will want to customize it as time goes by because each trader is unique. You do not need to spend a long time developing Excel formulas and so on to have an effective and easy-to-interpret journal. Do not waste your time building and updating something that tries to cover every small aspect, as this will likely distract your focus from the major facts you can learn from your journal. If you try to include every little piece of information, then this will probably make you less motivated to keep the journal updated, and you will then lose all the benefits of even keeping a journal in the first place. Focus instead on the major things so that you can improve them first, as they will make the biggest difference. If you learned something new and you are interested in learning more about trading, then make sure you subscribe to the channel so you do not miss out. Click the bell icon and click the like button if you enjoyed this video. Leave a comment and I will do my best to reply to everyone. Until next time.